Hello, hello, hello. Welcome to Monday Mortgage Mayhem. Which one?
Mayhem.
Mayhem. Which
Mayhem. No minute. Mayhem.
mayhem? Because mortgage is mayhem.
It
Real
is.
estate is mayhem.
It is. And we're throwing whistleblower facts out here. It's going to be mayhem in the industry. We're letting you know what to look out for.
Every Monday around 1 o'clock, we're going to just be throwing out some good old stuff for you to focus on and learn about during this Monday Mortgage Mayhem. And today, we are going to be talking about what is in a closing package. Actually, Mike's going to talk about it mostly, but I have some information at the end that I'd like to share. So, the difference between closing loan costs and total closing costs, what to look out for when you're comparing lenders, and then the settlement documents for the buyers and the sellers. So, we're going to go over that. So, pay attention. If you have any questions, make sure that you are putting them in the comments. And here we go. All right. So, Mike is going to take it off.
So the reason why we want to talk about this is probably one of the most important parts of getting a mortgage, and one of the most important differentiators between lenders, between who you decide to work with. There's a lot of games played when it comes to wrapping in a bunch of costs into a total closing cost package, because there's so many parts of a closing cost package, and so many pieces that represent closing costs. And does closing costs, does that include down payment? Does it not? Does that include the cost to do the loan? Does it include escrow setup? There's all different parts of what makes your total closing costs, or what we call cash to close. When you're told how much money you need to bring to closing, there is a whole lot wrapped up in there. And what a lot of lenders will do is they will, especially if it's like a refinance or something where you have equity in the home, there may be a lot of costs in there, but the one thing that they like to tell their clients is, don't worry, you're not going to have to bring any money to closing. It's all covered. And that makes people think like they're getting a low closing cost package. But in many cases, some of those fees and some of those points that they don't tell you about are wrapped into that. And if they're financing it with the funds from the refinance, for example, yeah, you might not bring any money to closing, but you may have financed a whole lot of costs that you didn't know about. So we want to give a real high level overview, not real overly detailed. We want to just give you an idea of the difference between closing, what I call closing loan costs, and total closing costs. And the sheet that we have up on the screen here is just a very generic document called a loan estimate. And this is, anytime as a mortgage loan officer, anytime if somebody says, oh yeah, we're in a market right now where, rates are up there. Everybody knows rates are up there. And I'm not here quoting any specific rates, but they're certainly in the high 6, mid 7 range for most buyers. And obviously there's opportunities to buy rates down and things like that. But, rates are up there. So if somebody came to me and said, yeah, I have a quote from a lender and they're giving me a 5.5, we know that there's more to the story than you're just getting a 5.5. And the first thing I'll say is, great, how many points are they charging you for that? And many buyers say, oh, I don't know, or I don't think I'm paying any points. The fact that they don't know is a huge red flag, because any lender working with a buyer that's going to quote a rate or give you an idea what a rate is should definitely be explaining to you, is this a par or an even rate, or are there points being paid to get this rate? So Sheila, if you can bring that sheet up again. I just want to point out, again, high level, but over here I've highlighted 3 sections. On a loan estimate, there's a left side, which you see over here, sections A, B, and C, and there is a right side. And I like to explain to clients that the real differentiator from one lender to another is going to be everything that you see over here on the left. Everything over here on the right are a government tax, are your prepaids where you're going to pay for your homeowner's insurance. You're going to prepay a few months worth of property taxes to get that escrow account started. These numbers over here will always be what they are no matter what lender you work with, because every lender is going to charge a few months worth of escrows up front. And the escrows are based on whatever the property taxes are on the house. So they're going to be the same no matter who you're working with. Your homeowner's insurance, something that you're going to shop for, you will always have to pay for the first 12 months in advance. So for example, in the prepaids, that's a year's worth of homeowners right here. That number is going to be whatever you shopped for as the homeowner. So these numbers will always be the same no matter who you're dealing with. But over here on the left, this is where it really differentiates, because these are the costs of doing the loan. These over here are setting up your escrow and your prepaids, but these are actually costs of paying all the different people and all the different services that have a part in writing your loan and getting you to the closing table. So this is a very generic example, but up here, an underwriting fee. Pretty much every lender charges an underwriting fee. They seem to be on average in the range of about $1,000, $1,100. But that's going to be to pay all the underwriters to do the loan for you. Right above here, you see 0.00 loan amount points, and you see a blank. Anybody that is charging you points, you should say, I'd like to see a loan estimate. And they will have to disclose that if they have a really low rate that they've quoted you that's well below the market and where everybody else is at, you are going to see a number over here in the points that you're paying for that rate as a buy down. It's very important to know that, because you might be being told that you're getting this unbelievable rate, but not told that you're being charged X amount of points for that rate. And some of these charges can be in the thousands of dollars. So that's the top part here. The section here called services you cannot shop for. These numbers here are stated. We have to estimate certain costs: an appraisal fee, the cost to run your credit report, electronic registration fee that the lender will pay. You have to pay the lender to register your loan with the government. There's a flood cert. There's a home buyer course that you may or may not have to take. We estimate the cost on that, but if you're a first-time home buyer taking advantage of a first-time home buyer program, you're going to have, in most cases, a home buyer course you'll have to complete and provide a certificate to the lender. Sometimes there's a charge for that, sometimes they're not. If we don't disclose a charge and then you end up having to pay a charge, we get hit and we have to pay that. So we're always going to disclose it just in case it's a cost to you. And we're always going to disclose high. Normally this is about $75, but we're going to disclose a little bit higher, because if we disclose $75 on a service that you cannot shop for, meaning you can't pick your own home buyer course, right, you have to do it the one that the lender says you have to do it through. So if we understate the cost and it costs you more, again, we have to eat that. We can't come back and charge you more. So this whole section here will, in most cases, be a little overstated. The third section here, and this, I really want to point this out: services you can shop for. This is title services. What buyers and homeowners don't, for the most part, don't know is you can shop for your own title company. You do not have to use the company the real estate agent tells you to use. You do not have to use the title company the lender tells you or suggests you should use. You can use anybody you want. Now, most people don't know title companies, and most people don't know somebody that works for a title company. So you trust your real estate agent or you trust your lender to give you a good recommendation. But this makes a lot of difference down here, because the settlement fee alone that title companies charge, they're either going to charge, I typically see $495 or $595. It's always one of those two amounts, maybe $550, but that's basically the fee that they charge to do your closing for you, handle the paperwork, prepare the closing packages, come there, do all the notary. They're charging you a fee for that. It's very important. In our Homes for Heroes program, there are some participating title companies that will charge only $150 because they give discounts to our hero buyers. So it's very important to know what you're being quoted by a title company before you decide to go with them. And then there's a couple other fees there. There's always going to be a wire fee, a recording fee. These range anywhere from $35 to $80. It depends on the title company. And then this premium for lender's coverage is important to know. This is basically a insurance policy that every buyer of a new home has to pay. in order to protect the lender from any potential claims against the title that might come up in the future. So you're always going to have to pay a certain percentage of the loan amount in that title fee. So if you add all these together on the left, okay, starting out, this is just an example of a set of closing loan costs that comes out to about $3,900. Now, if you get discounts that are applied later, especially like if you're in the Home for Heroes program, in many cases, we'll be able to comp your appraisal out. That saves you $600. In many cases, we can wipe out the processing fee and not have to charge you for that. Many cases, we can get you that title discount. That alone is $1,400 worth of savings that a HERO program, HERO meaning a nurse, law enforcement, first responders, military, and teachers, can take advantage of these discounted services that are designed for heroes. So you can see what that would do to this closing cost package. It would drop this down to about $2,500 for closing loan costs. So this is what differentiates one lender from another on where you're getting the best deal, or where you might be getting charged points you weren't aware of, or excessive fees in any of these areas that maybe you weren't aware of. This left side makes all the difference in the world when it comes to comparing lenders.
Wow. So the biggest thing that you can do really for yourself is to just make sure that you are shopping around to get the best deals. And I say that with kind of like an asterisk with it. So I would really have conversations with mortgage lenders, specifically brokers, because brokers can shop around for you. When you're contacting a bank really just they don't do any shopping around. The bank lends within their bank essentially. So have conversations with mortgage brokers and have them run through all of the costs that you're incurring at the end of this mortgage process. And then see which company has that best package. Um, and again, like Mike said, it's going to be based on what type of mortgage you're getting, and things like that. That will differentiate. But you want to make sure that you are comparing apples to apples. So if you're going to go out and get an FHA mortgage, or try to get an FHA mortgage, do that comparison between brokers for an FHA closing package. What does that look like? How much am I going to pay at the end of this? And if they're hesitant on explaining it to you, that to me would be a quick red flag, because they should be able to explain all of the line items to you. What do you say about that, Mike?
Well, the problem is to actually disclose an official loan estimate. That typically happens after you've decided to work with that lender. You've put in your application, you provided all your documents, they prep your file, and they do what we call initial disclosures. So at that point, you're in a mortgage process with that lender, typically before the first time you'll ever see a loan estimate that looks like this.
Okay.
Well, in many cases that can be too late, because I tell a lot of clients, I'm like, oh, you have this great quote from this other lender, ask them to shoot you over a loan estimate, and a lot of banks will decline to do it because, I mean, technically you're not supposed to send out an official loan estimate until the loan is in process and is properly disclosed, and you have all the legal disclosures that go with it.
So I guess the biggest question then is how can buyers protect themselves when they're out shopping around, right?
I mean, I provide all my clients with what I call a mock loan estimate.
Mm-hmm.
It's a self put together form, and I basically lay out all these costs and tell them which ones are going to stick, which ones are going to change, which ones are going to be potentially credited or comped out. And I give them a very clear understanding, and I specifically go over par interest rate, where the rates are at that time prior to being locked, and will there be any cost for the rate that we're talking about, or is it truly a par rate that they qualify for? I explain all of that up front, and any lender you're working with, should be able to easily explain all of those numbers up front before you get into a loan process with them. And if they say they can't, run away.
Yeah.
If they say, well, I'm not allowed to, they're certainly allowed to explain to you what you can expect
Yes.
for the cost for a loan. And they certainly can answer the question, this rate you're talking to me about, if there's anything you can take away from this, is asking the lender, is that a par rate or am I paying points for that rate?
Right.
That's one of the most important questions you can ask, and they should be honest with you and not mislead you. But there's very clever ways to mislead people in their verbiage by saying, no, don't worry, we're going to get you into this unbelievable rate. Your closing costs, what they'll do is they'll say your total closing cost package will be about $6,000 to $7,000. It's all included in the loan. This is great. This is a great deal for you. What they just did is they tried to completely skip over talking about the points that are potentially in that closing cost package and just made it sound like everything's all rosy for you.
Yeah.
And it's a sales tactic. Many lenders train their loan officers to pivot around your objection, pivot around your question. Sometimes they call it ARPing, where you acknowledge the resistance and you kind of reply to it, but then you pivot around and you change the topic.
Yeah. They ask another question, right? That's the pivot. They ask another question.
Yeah, ask another question. They're just trying not to answer the question directly and make it sound like it's an amazing deal for you. And it's the most unethical thing I think anybody can do.
Yeah, I would. In the end of all of this is to say, really educate yourself before you go out and buy a house. Talk to mortgage brokers. Talk to several of them. And really educate yourself about the process of real estate and the process of mortgages. And I always say this, the more educated you get about anything, no matter what you're going after, the less you can be taken advantage of. So it's a huge thing.
Right.
All right. So then on to the next slide. This is the Bowers settlement document. And what this shows is it shows what the buyer is essentially paying. What you see under the debit. Now keep in mind debits on the Bauer side is what they're going to be paying out. Okay? So on this mock-up, the property was $445,000. And for the deposit, that's an EMD, earnest money deposit. That's like a good faith deposit to hold the property. So that was $4,000. Now that's credited to their closing costs because that's something that they have put forth already. Then the seller concession. So on this particular mock-up, there was an $8,000 seller concession. Seller concessions could be for inspection items, maybe that needed to be repaired. They could just be for things that came up that they wanted seller concessions for. They needed closing costs, and the buyer needed closing costs, and they negotiated with the seller for those specific closing costs. So that's what that is. And then the proration amount right there for the adjustments, the trash quarterly. So that $2,730 is what you see is coming out from the buyer side. And then same thing with the title recording fee, the government charge recording fee. And then the miscellaneous charge for the real estate broker is their compliance fee that they can charge. And so at the bottom, you'll see balance due from buyer is $433,000. So that's what they're basically going to bring to the table. That, it's not cash unless they're paying all cash, but between mortgage and what they're bringing cash, that amount comes to $433,392. Okay. But keep in mind the debits is what's being paid by the buyer. Credits are what are given as credits. Okay. Any questions, Mike? Did that prompt anything for you?
Just that, and we'll talk briefly about property taxes prorations in a second here, but basically all prorations is from the day you're closing on a home. The day of closing is the day you take ownership of that home. That's the day all the monies are dispersed. So if you're in the middle of a trash cycle, they're going to charge the buyer from the day you take ownership through the rest of that cycle. And if the owner of the home or the seller has already paid, say through next month, you're going to pay them that month's worth. It's a prorated amount because it has to be, the costs have to be even from the day you take ownership and reimburse the seller for anything they've paid in ahead on your behalf because you've now taken ownership of the home. And it's really important to understand this for tax prorations because you can really get hit with a surprise at closing if your lender has not prepped you and calculated what you can expect for property tax prorations, which we're going to go into here.
Yeah, and the same thing with the HOA too. So there's different prorations, a trash proration, there's HOA proration, there's the county tax and the city tax proration. So this is a different, this is not related to the one we just looked at. This is a different example. But this shows you the different prorations that you can, that you could have on your statement, your settlement statement as a buyer. So here, remember, the debits are what you're going to pay. So the buyer is paying the proration of taxes because this is during, this is in the middle, or as you can see, it's 366 days. It was just in the beginning of the cycle, right? So they're paying most of the taxes. Okay. If you were in the middle, this probably would be broken in half. So it's based upon how many days you see there, 352 days, the 366 times 352 days, 366 times 199 days. So it's the amount of days in that cycle for taxes. And then all of the recording fees and HOA fees, association fees, and again, compliance fees. And that's all in the debit column. So, but the biggest thing I wanted to show you on this particular document was just that tax proration, because a lot of times people are like, well, do I have to pay taxes right away? Or, even the sellers are like, what happens with the taxes? Am I going to get money back? And you have to really understand that proration amount is based on the number of days in that tax cycle or in the HOA cycle, okay, or the trash cycle. So it's all depending on that. And from a buyer's perspective, your agent should always be right before closing. Your agent should be going over the settlement document line by line with you so that you can go into that closing understanding each and every line item and why you have to pay that particular amount. If there's any questions at all, that agent should be able to go back to the title company and ask that information. So does this prompt any questions, Mike?
No, if you can bring up the next slide. This is basically in the closing cost package for the buyer. This is where the prorations show up. It's the section K, and we go over this, but this right here where it says adjustments for items paid by seller in advance, that's exactly what it is. These are items that the seller has already paid in advance. And just a high level explanation, we all pretty much, we pay summer taxes and we pay winter taxes. Summer taxes, the bill comes out and they're due July 1st, but you have all the way till September 14th to pay them. So when you pay taxes, we always pay for the future. So last summer, when the summer tax bill got paid, that summer tax goes all the way from July 1st, which is the day it's technically due, all the way through to June 30th of the following year, which you see right here.
Yep.
So in this example, we closed this deal on November 14th. So from that day, that buyer now owns that home. They have to pay the portion of taxes from that day all the way through the end of the summer tax cycle. And they have to pay that back to the seller, because the seller paid summer taxes last year before they sold their home that go all the way through June of this year. The other line is for winter taxes, because winter taxes, the bill comes out that technically they have a due date of December 1st, but you can pay them all the way as late as February 14th. Now, your lenders, in most cases, are holding your escrow and paying those taxes for you. You're just paying into it. But the winter tax bill for this home, we closed on November 14th, and the seller had already paid their winter tax bill. Actually, they wouldn't have, because it would have been due December 1st. But once they do pay that, it's gonna be good all the way through November 30th of the following year. You will have to reimburse them for the winter taxes that they've paid. Now, in this case, you're only paying from November 14th to November 30th of the same year, because you're taking ownership before the new tax bill is due.
Exactly.
Now, in a situation like that, and this is why taxes are kind of difficult to anticipate, because not only are they going to collect this little bit of proration, but they're also going to collect for the whole winter tax bill, because by the time you make your first mortgage payment almost 2 months later, you'll be in the cycle of a winter tax bill being due. So they're going to collect that from you up front, the whole winter tax bill, at closing. Yep. So depending on where you're at in the year, can totally change how much money you have to bring for taxes and tax prorations. It's a very complicated topic, and we have calculators to give you the most accurate idea of what to expect, so you're not surprised at closing.
And I would also prompt you at this point, or after watching this video, to go back and look at our escrow shortfall video, to just make sure that you are staying on top of that tax statement every year. Every year, look at that tax statement to make sure that you are paying into your mortgage escrow the amount of money that you need to, because you do not want to end up with an escrow shortfall and have to essentially pay double the following year or year after that. So just go back and watch that video. I'll put it in here somewhere, and make sure that you get easy access to it. And it'll also have a link down in the description.
I just got a text last night from a client that closed a couple years back, that he got a tax bill that says it's late by $214. Well, their taxes, he had an increase in taxes. The lender hasn't caught it yet, so there's a negative in his escrow. I mean, it happens constantly. So as soon as you get that tax assessment in the mail, and if you read it and it says there's been an increase, like we said in our video, the escrow shortfall video, contact the lender right away. Be ahead of it, because you're going to have to pay it eventually. So why wait till it's too long? And now you get a major increase in your payment, or a big chunk you have to reimburse.
Exactly. The banks don't give out free money at all, ever. And if they do, please contact me and let me know.
Write me a check, too. Give me a big check, please.
Right. All right. The last thing that I wanted to touch on real quick is the settlement document for the sellers, because I think it's important to see that they are paying out a lot of different things as well. So their debits here are things that they're paying out, and just a few things to touch on. So the $27.30 that you saw for the trash, the quarterly trash, that shows up here as a credit to the buyer or to the seller, because they had already paid for that for a certain amount of days. So they're getting a credit of $27.30, where the buyer was having to pay that $27.30. Okay. And the same thing with the HOA. Now the seller, it's not always the case, but the seller a lot of times will pay both sides of the transaction. They'll pay the buyer's agent commission and the seller's agent commission. But commissions are always negotiable. So always make sure that you are having that conversation with your agent, whether you're a buyer or whether you're a seller. Down here is the title and escrow charges. The one thing I want to point out here is, just like you had a mortgage insurance policy, you also have to, the seller also has to pay a title owner's insurance policy. And that is to protect the title company, and it's protect the buyer, that if somebody comes to the house, knocks on the door and says, hey, I own this house, my grandmother what had air rights to this, that kind of protects that buyer, because they just bought this house and here somebody shows up. So that's always paid by the seller. And then anything that comes up, like a security deposit, like if people are staying in the house an extra 30 days, a lot of times there'll be a damaged security deposit that's left in escrow, in case there was any damage. And then water escrow is usually always held at the end as well. So as you can see, there's just all these different fees that the seller pays, and they have their own settlement document. And and again, agents should be going over the settlement documents, the buyer's side and the seller's side. The buyer doesn't need to see the settlement document for the seller's side, only the seller needs to see that. But the agents should prospectively be going over each of those settlement documents with their clients. And then this was just the end of it. So I hope you enjoyed this video. I hope it was educational for you. Any parting thoughts before we share the next video with them?
No, I think we covered a lot.
Yeah, I think it was a great topic that we picked. So, all right. So next week we're going to be going over why shopping and like I feel like I was just telling Mike, I feel like this is a topic I talk like on a weekly basis. I think I literally tell people this on a weekly basis. Why shopping for homes first is a bad idea. Like, don't go to Zillow. That's not the first thing you should do. You should be hitting your mortgage person up. And we're going to explain why you should do that and the steps to go through to do that. So, and then if you ever need any assistance, always, you can contact either one of us. Mortgage side would be Mike Hawker here. And his phone number is 248-379-4232. And then you can contact me. My business card is sitting there. And you can scan, if you happen to be watching this on a computer, pull out your phone, open your camera, and scan either one of those QR codes, and it'll take you to, I think Mike's takes his to his application, and mine takes mine to my Google business profile. So any parting thoughts, Mike?
That is it. Appreciate everybody that checked in and can't wait for next week.
Yeah, me neither. Everybody, I hope you have an amazing day. Take care and goodbye.
Thank you.